how you really feel about cryptocurrencies. When it comes to Bitcoin, what's the floor? When does it rebound? And most importantly, when do you start buying it?
Well, Sonali, first off, I have to give credit to Bloomberg for having me made the king of Bitcoin, because it was directly a question that I received on Fed Day, that when I said I thought it was worth about $400,000, that suddenly had me the focus of the crypto world. But the market had gone parabolic. There was a surge from 10,000 to over 60,000. We've pulled back here to the neighborhood of 31,000 a day, give or take. And the support level is really being tested hard. And the breakdown we got to about 29,500. Could be a false breakdown, but I don't think so. I think that there's still more air to come out of this, and ultimately, I think something in the neighborhood of $15,000 is where we're going to end up. The standard bull market, or bear market, I'm sorry, for Bitcoin has been an 80% retracement. And, given all the uncertainty and the new competition from new coins and everything else, I think that there's more downside to go. And, when do you buy it?
Yeah.
Well, I don't think anytime soon, but I would make that decision based upon price action in the future.
All right, well, let's broaden this out a little bit, Scott. Maybe you can talk a little bit about some of the correlations, if any, that you see right now out there in the market that would either give you pause or maybe encouragement here about dipping into some of these other assets.
Sure. Well, it's interesting, Romain. Everybody talked about crypto being a diversifying asset, and they likened it to gold, which it does have some of the same characteristics. But the price behavior has really reflected that it's a risk-on asset. And ever since the stock market momentum sort of began to fade, we've seen crypto come under pressure. And I think that, that could be the canary in the coal mine that's telling us that we have more problems ahead for risk assets, and in particular stocks.
Scott, Guggenheim Partners, though, correct me if I'm wrong, was looking to get authorization to be able to go into the world of crypto. Do you think longer term this is the area you're still going to pursue? How much of your clients still want to be able to get access to this entirety of the space, not just perhaps just Bitcoin?
Sure. Well, Caroline, I think there's a lot of interest in the asset category, and it's a mixed bag. Some people are telling us that they don't want, like for instance, our macro fund to have an exposure to Bitcoin. And I'm talking about our mutual fund. Our macro fund, which is not a mutual fund, does currently have exposure to cryptocurrency. And, I think that if we get another washout, the popularity of crypto is going to fade quite a bit among people who are so anxious to jump in right now. But again, that's probably a good sign that it's a buy. There's a real question here, though, about what is the winner in the crypto world? And obviously, Ethereum, for a number of reasons, looks better long term as a viable crypto coin than Bitcoin, but there are any other what I'll call the mongrel coins out there. Shiba coin, Doge coin. I'm thinking about launching one named after my dog Gracie, who's part Shiba Inu. But the truth is that a lot of this stuff is just junk. And at the end of the day, isn't going to be around in the long run. I've likened crypto to the internet bubble, and that is that Amazon was a fantastic stock to own, and you could have made it. You could have bought it in March of 2000 and made a lot of money, but you could have waited 2 years and bought it for about 80% less. And so the question is really for me, which coins to pick Bitcoin and Ethereum seem like winners in the long run, but I don't think we've actually seen the real the coin or the cryptocurrency that is going to dominate the market evolve or appear yet. Just like we didn't see Google well after Yahoo had already established itself as the dominant search engine.
Interesting. Scott, you mentioned junk. So speaking of junk, where is the best opportunity in credit right now?
Boy, well, if you want to be involved in high yield, probably double B credits. When you look at the lower quality category in high yield, like single or triple C credit, we've only been more expensive less than 5% of the time relative to U.S. Treasuries, whereas double B credit has been more expensive about 25% of the time. And given the likelihood that we're not going to see a lot of defaults, given the strong stimulus that we're getting out of Washington and the support from the Federal Reserve, I don't think you have to be too worried about a default or losing income. But one thing I think we do have to be alert to here is that we are coming into a seasonally difficult time for risk assets, and there might be a better entry point if you want to get involved in high yield credit than where we are today.
Speaking of entry points, if you're concerned about a risk-off summer, you see problems ahead for stocks, how much do you expect them to sell off and when? Well,
Sonali, I think that we should really focus on the later part of the summer. Usually the stock market has its weakest performance in the months of September and October. There's the old rule, sell in May, go away, come again at Labor Day. Statistically, it's actually been shown that selling around Memorial Day and buying at the first game of the World Series is when is a good entry point for stocks. So I think September and October are likely to be very rough this year. Maybe a pullback of 15% or slightly more. But once the Dodgers are at the opening game in the World Series, I think you'll be able to buy it.
Oh, interesting there. A little another bold prediction here from Scott. Scott, by the time we get to the World Series here, presumably the world is going to look a little bit different, at least with regards to how the market is sort of positioned. You have obviously a Fed meeting next week, but you got Jackson Hole. There's general expectations out there that the Fed will provide some clarity here on tapering, some clarity here on rate normalization. Do you anticipate that we'll get that by the time we get into the fall? And if so, how do you think the market's going to react to it?
Well, I think that, it's been very interesting to watch how hawkish a number of the Fed FOMC members have become in such a short period of time. And so I think, coming out of Jackson Hole, there's going to be an attempt to reconcile the differences of the various presidents and the governors on what the appropriate policy is. I think that by September, the Fed will probably feel some obligation to lay out how tapering will work, but may not be so anxious to actually announce a date when it would start. I think the earliest we would expect tapering to start would be March of next year. But again, anything that would be a sign of an acceleration would be interpreted as, bad for the stock market and probably good for bonds. I think that that is one of the many factors, along with the Delta variant and the circumstances that we are currently in with China on this Cold War, that are big ifs for this summer and are likely to be some of the things that lead to a lack of faith in risk assets.
Yeah, dig into that first if there, because of course you were one of the early voices talking about how concerned you were about COVID when it first struck us in early 2020, Scott. What now as we look in 2021 at the Delta variant? How cautious does it make you as a man leading your business, as a man who's investing in other businesses?
Right. Well, Caroline, first off, one of the rules that I look at is I'm not a trader anymore. I fight that. since I used to be a trader, but I'm an investor, and I think in the long run we're going to get a lot of support regardless if we get a resurgence in COVID or not. But when you look at the data on the surge in COVID cases, like in the state of California, for instance, we're back to where we were in early March at the number of new cases, and in the early March we were pretty much deep in lockdown. So I think there is a risk that some regions of the country are going to try to lock down again. That would obviously be bad for the economy. But I also think that, given the probably, continued improvement on the inoculation rate, that it's going to be more contained than it was the last time. So I don't think that we're likely to get the huge surge that we did last summer in COVID cases, but it'll be enough, I think, to spook the market.
Scott, we only have a few minutes left. Curious, as you think about pushing forward to the Fed next week and some of the discussions around taper, are you thinking that we could have a taper tantrum?
Taylor, I think we maybe already had it. The backup in interest rates that we got up through the end of March really was inconsistent with the policies the Fed and the program the Fed had announced. Our model showed that the fair value for the 10-year note was about 1.2%. So all of the rate increase above that level to me looks like overshoot. And I think that was, the concern. I think now that the Fed is getting its, elevating its level of concern around inflation, investors are starting to think they're going to move more quickly, which will contain inflation. And that has obviously triggered the bond market rally that we're in right now. And if we get the same degree of overshoot as we did to the upside, we have about another 60 basis points to go before we find a bottom in yields.